So you're making money as a content creator, you get sponsorships, ad revenue, maybe even selling digital products. But did you know one simple mistake could trigger an IRS audit? Most influencers and content creators do not realize this. But once you start making money online, you're stepping into business territory, even if you think it's just a side hustle. And if you don't handle your taxes properly, the IRS will notice. Today, we are breaking down the biggest tax mistake content creators and influencers make and how they can avoid it. So stick around. This could save you thousands in penalties. All right. My name is Shakira. I am a CPA and I'm the CEO of Tapped Insiders, where we help business owners stay accountable while using data to fuel their growth. Whether it's a fractional CFO service you're looking for, or tax planning, or just compliance manage, we make sure your business stays profitable and IRS ready, just in case an audit comes up, right? You don't want that stress, all right? Okay, so let's jump into it. So first things first, the IRS sees you as a business, even if you don't, right? If you think you don't owe taxes because you never got a 1099 form from anybody who paid you money, okay, PayPal or whoever, maybe you change your address and for some reason you didn't get the 1099. That's exactly how influencers and content creators end up getting audited, because a lot of creators assume, or influencers, that if you don't get that form, then you don't need to report the income, right? That's not true. Here's the deal. Even if you didn't get a copy of the 1099, the IRS did. They got a copy. So they already know that that income exists, right? Because the company that paid you, they must also report to the IRS that you got paid. So the second thing here is that you don't need an LLC for the IRS to consider you a business. Some people are so stuck on, oh, I'm not an LLC, so I really don't have a business. No, 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 no. Even if you're filing together on your personal tax return, but you have a business, meaning you're earning money from providing services or selling goods to people, even if you don't have an LLC, it's reportable income. You have to report it. Showing the income and the corresponding legitimate business expenses is how you reduce or eliminate taxes, not by hiding the income. So get legitimate business expenses to zero out that income as much as you can, right? Because if you make sure everything is documented properly, you wouldn't have a problem with the IRS. All right. Okay. So the third thing that you need to know is assuming free products are not taxable. Listen, those free products count as taxable income because you're providing valuable services, right? In exchange for that value that they're providing you also, which is those nice free products that you're getting. Now, I'm not talking about the miniature little things here and there that they send you, but understand that if it's a high value package that you're getting from them, a high value swag bag or something like that, that you know, if you look at the market, this thing costs like 5,000 and they gave it to you because they just want you to wear it. And any business that gives you something to wear is in essence you promoting their business. That's a service you're providing for them. So be very careful with those expensive gifts or expensive free products that you're getting. The IRS views that as taxable. Trust me, the IRS doesn't think it's not a big deal. If it's a high value and it's something that you provided service for, there was a trade, there was an exchange. So that means it's taxable and it needs to be reported. If you receive any unsolicited products or gifts, like, like I said, like those swag bags, so you have to attend the Oscars or whatever you got invited to, you need to talk to your accountant about it, let them know about it, talk to a tax professional so you could decide how you're going to treat that. And a lot of times it's always good that it's clearly defined in the contract terms. All right. The fourth thing is knowing what you can and cannot deduct. Look, some deductions will get you in trouble if you don't document them properly. So you're going to ask me, can you write off your vacation just because you logged it, right? No, not so fast. Here's what the IRS looks for before approving business deductions. I call it the 4 Ps, right? It's purpose. What's the business purpose? Does it have the price? You can't just have a random ticket without an amount of how much you spent on it and then expect the IRS to approve it as a deduction. What's the dollar amount? You can't just call a random number and say, oh yeah, that was a value. The period. Was the expense directly tied to that time frame of work that you were doing? The people, who was involved? Was it a client meeting or just like a personal friends hangout or friends stuff. You have to write these 4 things on the receipt or on the invoice. For example, let's just say you fly to LA for a brand deal. You need to keep the records of the business meetings, the travel expenses, and the work-related activities. You need to document those 4 Ps on the face of the receipt, and you need to keep a copy in your accounting software or in Dropbox so you don't forget. Nowadays, you just take a picture, send it to Dropbox. Take a picture, send it to QuickBooks. It's easy, but I don't know why small businesses forget these 4 Ps. Just document it, and you get to write it up. Purpose, price, period, people. 4 Ps. Remember this, right? The key is to document. Okay, so the 5th thing is to remember the 1,000 rule. The $1,000 rule. If you make over $1,000 as a content creator, you're legally required to pay taxes every 3 months. Most influencers or content creators don't realize this until it's too late. Most people wait until April to pay their taxes, but self-employed people like content creators and influencers must pay it quarterly. Why? Because when you work for yourself, no one is automatically withholding taxes for you like a regular job. The IRS expects payments on April 15, June 15, September 15, January 15. If you don't pay on time, the IRS charges you penalties and interest. Even when you pay on April 15, you didn't pay the amount they were supposed to pay over that time, they still go back in time and charge the penalties and interest. A smart move is to set aside 20 to 30%, depending on your tax bracket, of your income and pay every 3 months. You could get this money back at the end of the year. Whatever you get back, put it in the stock market, invest it in whatever you need to invest in. Don't play with IRS's money. If you know you're making all this money and you're putting money aside, you're just asking for penalties and interest. Why do that to yourself? Anything that you pay to the IRS, you get that money back and you invest it if it's too much that you pay. I'm not saying it's a smart move to keep putting so much in, but you have to estimate how much it is that you owe them and pay it every quarter. It's actually even better if you open a separate business bank account and set aside that money for taxes every time you get paid. So that way, every quarter you can send it in. I have a video of self-employment taxes. I will link it below and above wherever it is on the screen somewhere so you could get access to it. Okay. All right. So keep in mind that content creation or influencing isn't just a hobby. It's a business. I imagine, like, for example, a gamer that does not realize they're gaming or the content that they're creating and the camera they bought for the content they're using to do their gaming videos or the streaming software, and even part of their rent was deductible. Okay. This could save you thousands in taxes, right? I have created an influencer or content creator audit checklist, and the link is in the description below. Get access to that and see where you stand. How are you doing, right? If you go through the checkbox and you're not doing most of that, then you really do need to contact a tax professional, and see how they can help you better, right? I hope you found this video helpful. Please like, share, and subscribe, and we look forward to seeing you on the next video. Okay? Bye. Take care.